Demo account. All right, guys, good morning. We had our PPI prints here come out this morning, and they came back huge as far as a massive 1.4% month over month increase. There was an expectation of 0.5%. Again, they came back at plus 1.4. This is the biggest month over month jump since March of 2022. The PPI 6% year over year versus a 4.8% expectation. And then core was expected at 0.3%, and it came back at 1. All of this is creating an environment where the Fed fund futures are starting to price in hikes into the future. And you can see how dramatically this has changed here. Yesterday, as we were going into the close, there was a pause. It was still a pause as we were going into the close. Early this morning, there was a rate hike being priced into December of 2027. And now those rate hikes have been priced into April of 2027 again. Now, that is still a long ways out. That is essentially a year away. But in our current environment, that is not being priced into the market. It's not being priced in. There's also some things that we should note here when we're thinking about things that are changing. From last week, as we were coming out of Monday, our regime tracker essentially is screaming towards the direction of a boom, and it stopped moving in that direction late last week, but it hadn't moved into bust. We were just going sideways until yesterday, and it started moving into the bust direction. Now, one thing that's interesting about that is that when we're thinking about this from the perspective of our leading indicators, we also have some other signs inside of our market that there's potential weakness inside of the broad markets. And the first is that there's a negative correlation with the US dollar, and the dollar is in this massive monthly support level. It's a monthly double bottom. And then there's a weekly long setup. And then there's a daily support level that we're deep inside of. You can see how large this is here. Here's the 50% of it. Here's the 61.8% line. And we made a double bottom inside of that support. So we have this huge dollar strength trade that's going on right now. And because of the negative correlation, it can produce a headwind for the indices. When we're thinking about bank is inside of a trend break. It broke trend. Now, it's important to note that there is room for bank to squeeze back up into a resistance level, and that squeeze, and we're going to have to watch very closely here to see if there's a counter trend long into resistance, could produce a tailwind for the indices back up into their previous highs. That is absolutely true. When we're thinking about the VIX is going into its expiration next week, Tuesday. And from our old contract lows to new contract highs, there's a potential support level below us. But note that there is room, a little bit of room, for the VIX to fall back down into a support level as we're moving forward here into the beginning of next week, the end of this week and the beginning of next week. So, inside of the longer term time frames, all of our leading indicators show us this little bit of room for, again, the dollar to pull back into support, bank to squeeze into resistance. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.